I learned the 5 hacks to get your brand new LLC funded with $120,000 in business credit in just 2 weeks. By leveraging these hacks, you can rapidly build your business credit profile and secure funding needed to grow and scale your new LLC. And you should know this is all from the ground level. Your business can qualify with $0 in revenue. I spoke to LaJuan, who was a business funding consultant at his company OmniGrowth and has helped over 200 small business owners get $2 million plus in funding. He's been doing business funding for 10 years and even got over $500,000 in funding for his own businesses. And one of his recent clients got $120,000 in business funding by using these hacks. By talking to LaJuan, I learned the #1 personal credit issue to completely avoid that can actually be fixed in a matter of minutes. The best move you can make in the short term to strengthen up your relationship with the banks and increase your internal scores to get higher credit limits. And the bank that approved one of his clients with a $70,000 credit limit on a single card. How do you create an outstanding personal credit profile?
Having an optimized credit profile is like the key to funding your business. So the first thing you want to really focus on is with your credit profile, it's deeper than the score. A lot of times people, they think, oh, well, I got a 700 credit score, 750 credit score. That's all I need. Well, no, you got to factor in things like utilization, AAOA, which is average age of accounts. You have to factor in your credit mix, your total account. It's a lot of things that go into having an optimized credit profile. And, every different type of credit that you apply for, whether that's auto loans, personal credit cards, all those things are looking at different factors. So for business funding, there's key factors that need to be in place that most banks are looking for.
If you were to run down that list of data points for your credit profile, what does your personal credit need to look like to get in the door and then also get it to that 100K figure?
So the first step with the actual FICO score is going to be having at least a 680 to 700 credit score. That's kind of like the bare minimum to get you in the door. The next thing is with your utilization. So a lot of times people on the personal side, they think, oh, if I got under 30% utilization, I'm good. Well, in terms of business funding, you need to be at least 10%, if not under. If you want to be as optimal as possible, have your utilization at 1%. That's like the best. But if you're at 10%, you're at a good place. And then moving on to average age of accounts. This is something that's really, really big in the banking kind of business funding world right now. They're looking at like your track record for having, the ability to repay over time. So with average age of accounts, as long as you have at least 2 years, that's when banks are okay with, giving you some funding, is when you have at least 2 years of, average age of accounts. The sweet spot is, I would say, about 5 years. And then the bare minimum is like 1 year.
What do you think the biggest problem that you've seen over your years in people's credit profile?
Yeah. So usually is utilization. That's like a big one. And then derogatories. And so, negative items are like a key thing in the credit profile process as well. So when you're trying to go get business funding, if you got collections, is probably not going to happen. Now, late pays, that's another derogatory. But if your late pays are at least 2 years old, most banks will be okay with lending to you. But anything like fresher than that, you kind of running the risk of things not going the way you want to. But so negatives, you definitely don't want to have any of those. So that's charge-offs, collections, tax liens, any public records, repos, all that stuff like that. You want to have all that stuff cleaned out.
How should you properly structure your business to get funding?
What I would say, a lot of startups that we tend to work with, you can definitely get business funding as a startup. A lot of times people think like, oh, well, I've never made a cent, right? You just started, you just opened up your LLC, you just got your, your articles of organization, all that stuff from whatever state that you're in. You can get business funding immediately. So that is the thing. As long as, again, that credit profile is optimized at where it needs to be, you can go to a good amount of banks and be able to get business funding. You got to make sure that, like, with your structure of your business, that you're the owner, whoever the owner is, that's actually going to be applying for stuff and like PG and stuff. You got to make sure that they're mainly the only owner. At least I'd say 90% ownership. I like to be like just real clean with it and just have one person be 100% owner when you're going through a funding process. But if that's not possible, you can't have anybody that has over 22.5 to be exact of ownership in that particular company, or they're going to be required to be on the application. And you don't want to like kind of get that because it's real messy. So you just want to have that ownership stuff clean.
Great. And listen, this next question is selfishly for me. How do you make sure if you are actually in a high risk industry, can you use a Nate code that's in a less risky industry?
Yeah. So when you and this is different from state to state because some states make it really hard. If they actually did get your NAT code, they make it kind of hard to switch it. Some states is super easy. Like for instance, I'm in Nevada. It's like supremely easy for us to go online and just switch the NAT code. So I can switch a NAT code in 2 minutes for a Nevada LLC, right? But the other way is just when you're applying for funding, you can just say what your NAT. They're gonna ask you like, what do you do? Right? Or what industry are you in? And that's when you say. And then they're gonna apply that NAT code when you're setting at your business bank account or you're actually applying for funding, whatever it is. They're gonna apply that to your profile when you set it up. So that's why that's so important when you're setting that stuff up is to have that NAT code like in place of what you're gonna say that you're doing for your business. And I'll give people this one nugget because this is a real common one everybody likes to use, even when like they know they're in a high risk industry. Consulting is actually becoming a high risk industry. Now, what I will say is to like get to that next level of business funding, that's where having revenue is important, right? And revenue is becoming more and more important. And again, when I say revenue, it doesn't mean you need to be making $2 million a year. But I'm always telling people, man, and it makes such a big difference. Like, even if you can get a tax return, let's say you've been in business for a couple of years, right? If you can just get a tax return for 1 year showing that you did in revenue like 100,000, that will open up the door to so much more funding for you because again, banks are tightening up. And because of that, they want to see proof of revenue. Now, again, not saying that you can't be a startup and get funded. You can, but you're going to be mainly limited to business credit cards. So if you want to kind of unlock the door to like term loans, to lines of credit, which is my personal favorite type of funding, even SBA funding, those type of things. Like you want to you got to show some type of revenue. It doesn't have to be some crazy number. We've had people that had, 100,000, 200,000, like numbers like that, very small in the grand scheme of things, but they're able to use that and get double or triple the amount of funding that they would not have gotten without, having a tax return. So that's really important as well.
And you mentioned lines of credit. That reminds me, there's this bank account, this online bank that's offering a line of credit. It's called Novo. Have you heard of it?
Oh, yeah. We know Novo really well over on my end. Love them a lot. I recommend them. That was actually my first like business bank account I ever had was Novo when I kind of start getting started in this entrepreneurial journey of mine. But yeah, Novo is great, man. Not only like forget the business funding for a second, just having an online business bank account that does so much, man. Like, and I know you're familiar with the account, but like just having, they got invoicing in there, they got payroll in there. I mean, everything. So from the business standpoint alone, of just having that a bank account thing, you can do that, right? It's great. But moving into the line of credit, they do have a line of credit, as we know as well. And it's really good. So it is revenue based, however. So I will tell people that it is revenue based. You got to have some type of revenue being generated to qualify for it. Usually it's in that 10 to 20K a month range for Novo. But if you do have that, yeah, you can go in there, get a line of credit. They soft pull Experian, by the way, and you can go right in there, apply for that account, be able to get that line of credit as well if you do have the revenue requirements for that.
How do you create a good partnership, or what banks to partner with? How do you do that process?
Yeah, so a lot of times people just want to go to the big banks, and that can work a lot of times, but you want to really know those gems, I like to call them, those regional banks in your area, even sometimes the credit unions in your area. That's really where the money is. And this is across the board from big banks, credit unions, regional banks, doesn't matter which one. All these banks are trying to adapt the credit union model, and that's relationship banking. All these banks want to do it now. So relationship banking, that means, being in the branch, they want to know you. They want to know the business owner. They want to know your needs. They want to do all this stuff, right? And so you have RMs, like especially from Chase, they're like going to offices to sit down with ownerships and like discuss their needs. Like that's where the banks want. That's how they're trying to pivot now. They want to have that type of relationship with a business and the business owners, whether it's one person or ownership group, whatever it is. They want to have that type of relationship. So having said that, it's important to actually go into the branch when you're applying and to start to build those relationships, knowing the branch manager, knowing your RM, knowing all these people inside the bank, because not only can they help you maybe get stuff pushed through, but also, you can get access to other financial products that come down the pipeline. And I know, a lot of people hate going into the bank. I used to be one of those people as well, but it's way better. It is way better. I know it's a hassle. It can be annoying. It can be a long process. It's a lot that goes into that. Trust me, I know. But it is the way now.
What are the steps that you can take to ensure that you get as close as possible to that bank so they know that you're a good borrower and they want to do more business with you?
So the first step is, when you set up the business bank account, you set that up, you kind of meet with whoever the relationship manager they set you up with. I always recommend to, a lot of times when you go into the bank, they'll try to have a personal banker do this sometimes. Definitely work with the people on the business side for sure. That's one aspect of it. Also, when you're going through this process, knowing who the branch manager is, if you can, try to figure out who they are as well. Try to, set some points up with them also. And then if you have it, and this is for people that don't mind like waiting a couple months, like they're not in a hurry to apply for something, they want to optimize as much as possible, increasing your bank ratings, right? So every bank has like internal scores for them, right? And so when you set up a business bank account, if you're able to put, a couple $1,000s into that account and let it sit for 90 days, that's going to significantly increase your bank rating, allowing you to, increase your approval amounts and odds as well. So that's like a key thing that you can do when you're first starting out. But again, it's not necessary. A lot of times people ask me that, they'll be like, oh, well, do I need to put like $8,000? Like if you're doing it right when you open an account and expecting a result, it doesn't work like that. All right. Because bank ratings they're like quarters, like they're 90-day periods. So that's how that works. But in terms of just you waiting, it is, it is a little bit beneficial. But again, if you have a great credit profile and maybe you got revenue already, you can show tax, like you don't really need that.
And with your company, you can help people get and optimize their personal credit profile. Is that right?
Yeah, to an extent. So basically, like for us, like we do a lot of those trainings and teachings on the YouTube channel. And then when people are like, they want to come work with us, it's more like when they're ready to fast track. So maybe you're already at a 700 credit score, 680 credit score, what have you. You already kind of are in place, but either you don't have time to like go through all these banks and try to figure out which banks to go to at the right time and all that, or you're just you're busy in your business, or you're tired of being enrolled in a YouTube university, whatever the situation is, right? You just want to fast track and like just get some one-on-one help and have this built out quickly. Then that's when those type of people come and work with us to kind of fast track and get like a guaranteed solution and a build out done for you.
A lot of people I feel want that solution because I have audience members who contact me and I've been on coaching calls with them and they say they already have their personal credit in excellent shape and they've already been gardening for years and they're just waiting. They want confirmation that they have the right funding strategy. Is that something you could help with?
Yeah, no, I mean, that's literally the exact type of people that we work with, some of the client results that are on our channel as well. But yeah, no, that's who we really kind of work with, is those people that are like, they got 90 the puzzle already put together. They're just missing like that last piece of the puzzle. And that could be different for everybody. Sometimes we work with people, they didn't know utilization was an issue. We help them solve that. Or maybe, they were going to the wrong bank at the wrong time. Certain banks don't like certain industries. So that could be that. It's a multitude of things that could be one piece of the puzzle that you're missing. So that's kind of what we help identify. But like you said, the audience that you're speaking of, yeah, that's typically who we work with, is people that they're ready to go. Is just there's maybe one thing or two things they're missing, or they just don't know which banks to go to and they don't want to mess up their good personal credit.
And speaking of those people, how many small business owners do you work with and what is your history as far as getting them funded?
Yeah, so to date, we've worked with over 200 small businesses, solopreneurs, gig workers, those type of things on a monthly basis. Maybe, we'll work with anywhere from like 15 to 20 different businesses at a time. And everybody's getting one-on-one support too. So, it's just, when you come work with us, it's not like a course or anything like that. You're actually getting one-on-one strategy build outs. We're connecting you with some of these banks, and when we build your strategy out, all that. Yeah, but again, like I said, we do work with people one-on-one across the board, whether whatever channel or avenue that you find us. We're building your strategies out custom to you, your business, and getting your results, and we do guarantee results as well. That's another.
When you're working with a small business owner, people have a funding goal, but also they have their situation that they're in, right? They have a specific, maybe they have a high risk business, maybe they have a lower credit score, maybe it's a higher one, and maybe they have more available to them. You have to make the best of what your goal for your funding goal is and where you're currently at, what your situation is. What do you think about that?
I tell people all the time, man, like and this is really big. I'm glad you hit on this, like, because a lot of times people come and they're like, oh, I need 200,000 in funding, right? This is really common more so with startup. Oh, I need 150,000 in funding, or I need 200,000 in funding. I need 100,000. Why? A lot of times they can't answer that. And so what I'm always telling people is, like, how much do you need to get dollars in the door? That is the most important part. We're not doing this to say I got 300,000 in funding. We're doing this so that you can start your business if you are a startup, or if you're an existing business, you need it for working capital a lot of times, or to expand, or whatever that situation is, or grow. You're doing that for that reason, not to say you got X amount of dollars in funding. So what I always tell people is what's the number, and this is mainly for startups I'm talking about, what's the number that you need to get that first sale? What's the number you need to flip that first house? You know what I'm saying? What's that number? Right? Not, oh, well, I want to do this, I want to get this office space. Like, forget all that. Like, what's the bottom line number you need so that you can bring money in the door? Because at the end of the day, we're all here to grow a business and to cash flow. That's the number one thing. So that's what I'm always kind of working with business owners, so especially again startups. They more kind of have this problem where it's just like, no, you need to figure out what's the dollar amount that you need to like turn a profit. And I know for me, my first business credit card, I tell people all the time, my first business credit card was only $15,000, right? And a lot of times people get way more than that we work with, like starting out. But like that was my first business credit card, was $15,000, and I used that to start my first business and turn that, which is my marketing agency, and turn that into a very profitable business within like 2-3 months, right? Which is one business credit card, right? And we've had a lot of clients, they'll tell their story like, they first business credit was like $10,000. Right. So it doesn't take that much, to be honest. If you have your stuff laid out properly, you have a plan in place, okay, I need this, this, and this to get my first dollar in the door, and you build from there.
What's the highest amount that one of your clients has received on one business credit card?
70,000.
Wow. What bank was that with?
Chase.
What sort of financials or profile did they have to achieve such a large limit like that?
Oh, they got revenue for sure. Yeah, they have revenue to prove tax returns, right? So, and that's why I'm always pushing that, like, especially with the businesses that like they're in business, and I work with a lot of businesses or business owners that they are making money, but they just haven't filed taxes yet. And so I'm really pushing them and, giving them tools on how to get their taxes cleaned up, or like how to like make their CPA's job easier. We have some AI tools that we recommend to our clients that really make that process supremely easy. But I'm really pushing that because, again, banks are wanting to see that more and more. And literally, if you can just show, we talked about this earlier, but like if you could just show 1 year of tax returns, like it's going to double, triple, or sometimes quadruple what a bank is willing to give you. Like, it's crazy.
Let's go on the other side. What about no docs, as far as like showing no tax returns? What is the most that you've seen on a card for a business owner like that?
That has no financials to show? 25,000.
What would you say is the best strategy to start building business trade lines from day one?
Yeah, good question, man. And so the old strategy used to be, get a DUNS number, get some net 30s, get your Home Depot cars, all that stuff like that. Well, now, and this is what I tell people with the strategy that we use, you can do like you kill two birds with one stone, so to speak, right? You're building your business credit, but you're actually getting funding at the same time. And so when you're like getting business trade lines onto your credit profile, that's why I preach the personal credit method, because a lot of times people say, oh, well, I don't want to use my personal credit. Do you want to spend a year, 6 months to a year trying to build up your business credit profile? You can, but guess what? When you go to some of these regional banks, big banks, unless you're doing multiple $1 million a year in your business, they're gonna want to see your personal credit. Like, that's just what it is. Like, you can't get out of it. So, having said that, if you already know that ahead of time, if your personal credit is not good, you should work to fix that. A lot of avenues to do that. Secondly, if it is good, it's the fastest way.